Hello, my name is Mike Sinibaldi and welcome to this week's video edition of Heard on the Street. In this edition I'm going to take a look at the S&P. Another week of trading has passed and a long-term wave count remains uncertain due to the fact that the Dow, as shown here in this chart, has completed 4 non-overlapping waves and the Nasdaq has done the same as well as reached a new recovery high. Here is the weekly chart of the S&P. Last week I proposed the 2007 to 2011 analogy where the market would fail by July 29th. Focus on the fractal nature of this market, not the wave B crest or wave 4 low, as there are no assurance that these are correctly labeled at this juncture. Interestingly, the market closed near its high as it did in 2007, as labeled as "you are here" and here. If the analogy is to be validated, the market should open higher next week and then close the week on a bearish tone that coincides with the deadline to extend the U.S. debt ceiling. Friday's news that the House Speaker had withdrawn from negotiation talks could spook the markets, and weak hands may look to book profits in Monday's trade. Look for a tell in the Asian markets. 2 counts remain, yet both are suspect and need further confirmation. In review, here is the running triangle interpretation. If you recall, I stated in last week's video that wave D would need to be exceeded to validate that the triangle has completed. Continue to watch 1352.75 if you're working this count. The other count involves a running flat that technically was invalidated due to the wave overlap between waves 4 and 1. However, as I mentioned earlier in this video, the Dow and the Nasdaq have failed to exhibit a similar overlap. Whenever I have several markets that do not confirm each other, I often take a look at a price chart on a closing basis. What I mean by this is that exceptions can be made, where upon looking at the closing prices, the E-mini futures did not show overlap between waves 4 and 1. And this would certainly align the Dow and the Nasdaq with the E-minis. From a technical standpoint, the MACD also bolsters this by exhibiting a counter-trend signature where the MACD crosses the signal line yet fails to break the zero line. Confirmation that this count may be of higher probability would require wave C to be completely retraced in less time than it took to develop, and do so in 5 waves. So far, neither has occurred, and the deadline for the latter is once again August 2nd. Coincidence? I don't know. But what I do know is that if the market hasn't broken out by then, and we don't have a debt deal, then all hell will break loose to the downside. I hope you found this video helpful, and best of trading.